Hey everyone, start of the month means only one thing. We want to talk about stats and find out exactly how the Halifax market performed in September. So when you look at the month, there's been some pretty good changes this time. So let's have a chat and let's go into some stats. Okay, I understand. You're here for what is the average selling price. And well, let's just give it to you straight away. The average selling price this month for the month of September was $619,000 and like a smidge over that. So we have bounced back up again because last month that was $596-ish thousand. So we're up 4% on that. Last year was $577,800, so we're up 6% on that. And I wasn't expecting that. Like, I really wasn't expecting such a jump from last month. Because if you look at last month at $596, this month at $619, that's a $23,000 increase from last month to this month, which when you look at it is a pretty big jump to get just in 1 month. So I did see that there was quite a few markets where the average this month compared to last month was pretty high. Halifax South, Halifax West, Fall River, Hammonds Plains not so much, Bedford not so much either. But when you look at some of those numbers, they were quite a chunk higher. Like the average sale price in Halifax South was $1.41 million just for this month. So that tells you that like the more higher priced houses actually sell, the more we're going to drag up the average. And that's really what happened. It just went up by, 20 something $1,000, which is quite a big jump. When you look at the average list price and compare it to the average sale price though, we're at 99.6%, which really is only a $2,500 price difference, lower as well. So not that real. Again, we've been saying this now for quite a few months. The list price to the sale price is not actually that much. Yes, we know. Going to the individual markets, which we will certainly do, you can see that is definitely, some of the markets are performing much better, some are not. But we're just not seeing like it was roughly 2 years ago, where there was a big gap between sale price and list price. So list price was here, sale price was here, and we were getting like $20,000 to $30,000 over asking. That's not really happening when you kind of delve into these particular numbers for the month of September. We're not there anymore. So the message really for all of the sellers that we're dealing with out there is be accurate in your pricing. Because here's another little stat. We did this last month, and this month is even more interesting. If you looked at all of the houses that are sold and said, okay, here's your original list price. Here's the price you are when you actually went conditional. What was the price then? The difference between those two prices is $52,000. Over 90 houses, I think it was like 94 houses, had to do a price drop on average of $54,000 to then become the listing price that somebody said, go on, I'll write you an offer on that one. And then list to average is practically the same number. I mean, 99.6%, it's the same number. One thing I did want to do as well, it was mentioned to me on the last video that maybe we should start looking more at a median price instead of the average price that I've been looking at. So I did a quick, okay, what happens if we did do the median? And the median price list was $596.86. Median sale price was $590.066. So it kind of didn't change whether I used the average or the median. It's just the actual number itself changed because we were looking at $619,000 average sale price, whereas when you look at the median, it just drops down to $590 from a median sale price. But the way that it works in terms of what's the list to sale price, it's basically the same. It's just a game of percentages. But all we did was kind of drop the prices. But we will keep looking at the median as well to see if that makes a difference. That was just for the whole of HRM. I didn't go into it market by market, but that's certainly something we could do for the next video. Now, looking at that last month that was 100.4%. Previous year, that was 99.9%. So it's a very similar month. Like, it's not moving by that much anymore. So the days of crazy amounts of multiple offers and going way over asking price, yeah, sorry, there's the bubble, here's the pin. Those days have gone. We are not seeing those anymore. So now it's just about being the most competitive property in your area, in your price point for your condition. Because remember, price, condition, and location. Those are the three things that we know you have to get right to the market to get a buyer to write an offer. So one of the other things we did see though is that the days on market has actually gone up a little bit. We're at 27 days on market. Now last month that was 29, but last year that was 33. So we're 2 days better than last month and we are 6 days better than last year. But it was also another factor when I started looking at, when you look at the new listings compared to the sales, this is the first month where the new listings actually went up, but the sales continued on a little bit of a, volume wise, units, how many houses did we sell, continued downwards. So all of a sudden you can see that there's a gap now, whereas they used to kind of follow each other. Listings were kind of trending downwards, number of listings, number of sales are trending downwards. Well, this month, number of sales is still trending downwards, but the listings actually went up. And that's what's created our next number, which is the months of inventory at 2.5 months, 2.5 months. By definition, still a seller's market, but it's a change because last month that was at 2.1. Last year, that was at 2.5 as well. But this year, we have a lot more listings for sale compared to last year. And we did obviously a few more sales volume as well. So that kind of all stacks up. Getting into the number of units sold, we're at 358 sales this month. Last month, 416. Last year, 320. So we're up on last year, down on last month. But then let's have a quick look at the new listings. So how many houses did we put onto the market this month? We put 525 onto the market this month. Last month, that was 476. Last year, that was 495. So similar-ish trends, but more interestingly is that difference between we put more listings on the market, but we actually sold less houses. There's that gap showing up. That gives us the months of inventory that actually increased from last month to this month. And it's kind of the first time that we've seen a gradual trend upwards in the months of inventory. Now, sometimes as well, we are talking about a Halifax market here, which is fairly seasonal. We do see a dip in that kind of October, November, December months. And we're actually seeing a little bit of it in September. So it's a little bit early, really, compared to what we'd see for a normal activity. Number of houses that are actually active for sale right now, we've touched on this a few times, is 904 homes. 853 last month, 792 this month last year. So we're up quite a lot, and over 100 houses more than if you go back to September last year. So you can see we're starting to add more listings, and that stacks up with the fact that we obviously put 525 new houses for sale. Now that brings us into, let's look at the sales to new listings ratio. So this month that is 68% because we sold 358 and we have new listings of 525. Compare it to last month, that was 87%. Last year, 65%. So it's kind of very similar to last year. But last month, obviously, we were doing a lot better because the number of sales were up. The number of listings wasn't up quite as high. So that's why we kind of topped out at 87%. Number of units actually sold. So how many houses did we sell? Well, we kind of just touched on it because we sold 358 homes in the whole of September for the market here in Halifax. Last month, we were at 416. Last year, we're at 320. So we're doing better than last year, but we're actually slowed down from the month of August as well. So, I mean, September, it's kids go back to school and things like that. So, we could definitely see a little bit of a slowing down there. So October is usually slower, but, we're doing everything we can to make sure that the market kind of stays as buoyant as possible. So we'll see what happens to that number in October. Now let's move on to the top markets, because back in number one is Timberley, Prospect Bay, St. Margaret's Bay, Upper Tantallon area there. Average sale price there of $572,000. Average list price there, kind of $572,000 and a half. So 99.9% sale to list ratio there. So basically the same, may as well call it the same. 28 days on market, 43 sales, 147 houses sold, gives them a 3.4 months of inventory. And that was our number one market. Coming in at number 2, our second market is actually Sackville. There were 33 houses sold there, 19 that are active. So that gives them like 0.6 months of inventory, not a lot. Back into the top 3, a very popular market as usual, Sackville. Average sale price of $468,500. Average list price there, $457,000. So that gives them a $11,000 sale to list increase. So in other words, selling for more than the asking price of 102.4%. So pretty buoyant market there in number 2 because it's Sackville. It's just surprising when you remember how pricey Sackville used to be or how not pricey it used to be. And now you're seeing things selling at an average of $468,000. Coming in at number 3, we have East Hants, Colchester West, Enfield, Ensdale, Lance, that whole area up there again. 31 houses sold, 92 active up there, which gives them 3 months of inventory. 42 days on market. So they've actually done a little bit better than in previous months because I remember that being fairly up there, whereas now we're down to 42. Could be that not many new builds actually sold. But the average sale price there, $468,000. Average list price there, $468,000. So pretty much the same number. And that rounds out our top 3 markets. So really the big message here, and especially as we're getting towards like the last quarter of the year, interest rates are coming down. So the buyers are definitely back out there, but they are absolutely streetwise. They are absolutely looking for value. Sellers, you don't want to be doing that $52,000 price drop on average to actually get your property sold. You want to be fairly accurate with your pricing and just get the buyer in the door through the marketing, through the photographs, through the virtual tours, through the floor plans, all of that good stuff, and actually show them that you are the best value in the price point for the kind of house you are in your neighborhood. And that will get you sold. Buyers, keep sticking around, keep looking to see what those interest rates can do. Get yourself a rate hold. If you get a better interest rate than the actual rate hold, you will get the better interest rate on closing day because it's getting busy out there. I am working with quite a few buyers and we are looking for good properties to buy. So it's definitely an increasing market as we're kind of getting towards the tail end of the year. There you go. That's your summary. If you have any questions, any details, then sure, get in touch with me and let's have a conversation.